We'll start with Axis Finance. Vipin Saraf and Biju Pillai will sort of start, followed by Axis Capital, Chirag and Salil. Then we will have Axis AMC, Chandresh will come in, and lastly, Gop Kumar from Axis Securities. Thank you, Vipin.
Good evening, everybody. Myself, Bipin Saraf, MD CEO of Axis Finance. Along with me, Biju Pillai, DMD of Axis Finance. I know it's a tiring day and we are end of it. Like they say, best is reserved for the last. So I'll quickly run through the Axis. So Axis Finance is a very, very recent journey. We started in 2014. And as you can see from the numbers, I think some of the key takeaways that we have done, we started with the wholesale banking, basically wholesale product NBFCs. And over the period, if you see in 2019, we started expanding into retail. Although during the COVID period, I think we took a decision to ramp up our retail book, and today the retail constitute around 39%. Last year, we embarked upon also to look at the SME segment, and that is also now catching up. During this whole period, I think the NBFC sector has gone through a lot of ups and downs. Despite that, I think with every cycle, we have come out strong. And as you can see, we have the best asset quality in the industry. As far as the return goes, I think we are, despite the investment in the retail side, I think it's just 2 years now. And despite retail making a break even, but it takes time to give a good return, we have been giving a ROE of 20% plus. I think these are some of the broad numbers for H2, H1, second half. So I'm just leaving it for a second. So we are a AAA rated NBFC. Growth numbers, as you can see, as I told you, it's the fastest in the industry. Profitability, it has grown by 85%. The wholesale, the retail book. Next. This is, again, as I said, if you see till 2018, it was more of wholesale. From 2019, we started our retail journey. And 2021 is where we started our SME, emerging market. And that's where, if you see on the top, basically the number of customers that has grown over the period and how we have diversified and gone into granularity. And on the other side, you have the various product. So it's basically the various product that we are looking in Axis Finance, both on the wholesale side, the retail, and the emerging market side. So out of all this product, 85% is the secured lending book in Axis Finance. Biju, can you take this?
Okay. So I think Bipin has covered or showcased the quantitative metrics for you. These are some of the qualitative elements which have which is the reason why we've seen the quantitative success that you saw. Now, these look very, these don't look like differentiators, but these are differentiators as far as we are concerned. And this has resulted in us delivering the consistent performance over the last couple of years. Management depth, basically what we're saying is that from inception, the team is intact. I think all the people who are in the wholesale or the retail businesses have remained with us, and which provides a lot of stability and consistency to what we want to do over the next couple of years. So that I think is very, very critical. I think it's a people oriented business. So if you have people who are there, I think it makes a lot of, it gives a lot of confidence to us. On the processes and productivity, I think I'll just summarize to say that we've reimagined the entire journey, which is the loan journey as we call it, from three stakeholders standpoint. One is the customer, one is the employee, and the third is the vendor who helps us bring the business in. And each of the journeys have been defined in a manner where we can proudly state that there are a lot of industry first initiatives that have happened, not only resulting in customer delight, more importantly enhancing the efficiencies and productivity of every stakeholder in the business. I'll just give you one example so that you get a sense of what we've done. Now, typically if you've taken a mortgage loan, right, you would have signed almost 80 to 100, you would have signed 80 to 100 papers, and if you have two people who've co-owned the property, that's about 200, 250. And mostly even today, after 20 years in retail business, people still sign blank agreements, right? So for us, we don't have a blank agreement, everything comes pre-filled. So there is no question of any miscommunication happening, and it's e-signed. So it just takes about a minute or two to get the document executed. It's not only about customer delight, but there's hardly any first time not right, as you call it, FTNRs, as far as the ops guys are concerned. And the disbursements happen in the fastest time in the industry as we speak right now. So most of the stuff that we have done have been reimagined, and it's helped us gain a very, very strong foothold in the business in a very short period of time. Investments in people, I think it's already got covered, but the fact remains that we don't want our people to do follow-ups and do what we call send MISs to the central office. Most of the enablers that are required for people to be out in the field are available with them, be it on the collection side, be it on the credit side, be it on the sales side, and that helps us ensure that we run what I call a very, very efficient shop. One Axis synergies, I think we all know, so we don't need to elaborate on that. And more importantly, I think one big fact is that the entire retail book that we've done, obviously even the wholesale book, is all organic. We've not bought out any portfolios. So the entire growth is based on the businesses that we wanted to do, the customer segments that we wanted to focus, and the customer relationship that we wanted to maintain. So it's 100%, almost 100% organic book as far as we're concerned. Just a quick snapshot on retail, I think already covered, but the third, I think, vector which looks at the portfolio quality should give you an indication of how we've been able to build this book despite those 2 or 3 waves of COVID that hit us, and we were relatively small at that point in time, but we managed to not survive but thrive on those uncertainties and come out strong. Our mix is 70 to 30, so 70% is secured and 30% is unsecured.
So again, on the wholesale side, I think on an overall basis, if we see Axis Finance, the growth that we have done in last 9 years, I think we have always kept our eyes on the asset quality. And that is why if you see our asset quality, even on the wholesale side, I think, just to give you another example, during the COVID, I think we had just one restructured asset of 6 crores. And there was 0 moratorium cases in the whole portfolio. Second, as you can see, we took a conscious call of basically bringing down 2 exposures, basically the RE and the LAS, which was around 60%, to basically in single digit. Even in RE, we are doing the last mile funding, so it's more of an inventory funding that we do. And as you can see, most of the wholesale book is secured. The unsecured is mainly to the high-rated companies, and that too short-term loans. Another thing, as I said, we have converted all basically obstacle into an opportunity. I think if you can see this liability curve, our 40% of liability was short-term. We have converted them into long-term liability. Today, my long-term liability stands at 94%, with a well-diversified sanctions from banks and also from mutual funds, insurance, family fund. So across investor, the liability is spread across. These are some of the broad numbers. I think what we have achieved till now in the first half. As our retail picks up, I think we'll see further improvement as we go along. And basically, what we are saying, going forward, will continue to be the fastest in the industry, will grow at 2x of the industry, will continue to deliver more than 20%, will continue to basically have the digital path in each of our processes to make it more efficient. And I can only conclude and say that we are not going to do anything different. But what we have done, I think we will continue with that. And that is how we will try and achieve the vision that we have set out for ourselves. I think the growth, again, we will keep an eye on the asset quality. And also, as we looked upon the new opportunity, I think we will be in a position to deliver it. We have done it in the past. I think with the management bandwidth that we have and with the Access Group, I think we will continue to deliver the returns what we have delivered and try and maintain that.
Good evening, everyone. My name is Salil Pitare. I'm the co-CEO of Access Capital. I have along with me Chirag Negandhi, who's my co-CEO. We will talk about a business that is, I guess, close to you because a lot of you are part of this business itself, the investment banking and equities business of Access Capital. So, quickly, Access Capital at a glance, over the years, we've been a consistent leader in capital markets in India. We've done probably the largest volume of capital market transactions over long periods of time. It's an area which is a strength area for us. And you'll always find us at the leaderboard position, at the number 1, number 2 spot. We've been number 1 if you take data over the last 5-7 years or so. Within the capital market side, a lot of corporates really trust us for doing the regulatory part of the work, apart from our strong marketing strength. Almost every alternate IPO that we do, we are also the left lead banker for that. As a result, we have very strong revenue market share in this business. We are over 10% market share in this business, carefully crafted and maintained over a long period of time. We do humongous amount of transactions on the equity capital market side and so on. In this, what gets lost also is that we have a very robust non-ECM practice, which is an advisory practice, and we've been involved in some signature transactions on the M&A side of the business, deals like L&D Mindtree, Piramal Glass, and so on. And over long periods of time, we are also a top-tier domestic M&A house. The other piece of business that we run, which is close to where you guys are all, is the entire institutional equities platform. We've invested seriously in this platform over the period of time, and we are now increasing our volume, our shares both in volume and in revenue terms in this business. Strong profitability, even in a tough year. The first half of this year has been tough for capital markets in general. We've been solid in terms of profitability, albeit not at the same levels that we were used to in the earlier years. We have a full service offering on the investment banking side. We work for large corporates. We really pride ourselves in doing repeat business. So that's on the IB side. On the broking and equity side of the business, large research coverage, all relationships domestically, globally, and endeavor is for most of our analysts to be in the top tier. What's really differentiated us over this, and how have we gotten over here? I think strong management team, pretty experienced. A lot of us have been with the firm for a while. Resulted in very well developed execution capabilities, very well systematic way of doing business, ability to handle multiple transactions at the same time. This has got well hold over long periods of time. While our bread and butter is transactions, so every deal, every block trade, every IPO, every QIP is important for us. The mindset of the firm is very relationship oriented. We know that our clients, whether it's corporate or institutional, have to be cultivated and nurtured over long periods of time. And we've built this relationship mindset over the last 2 decades. We approach business in form of a solution approach. Can I provide solutions to my clients, whether it's a corporate or otherwise? The solutions are not necessarily only a one specific product solution. We do multi-product solutions within Access Capital, if required, even beyond that, into going across into the Axis Bank in general. And that's where the One Access theme does come out. We do recognize this market is robust, is rife with newer and newer product offerings, like REITs and InvITs are all new product offerings. we are continuously investing in building our distribution for each of these practices to cater to these new market offerings. And finally, a big amount of endeavor on technology. We do believe that technology is going to be the cornerstone of our business success in the future. And the last 2-3 years, we've done serious investment on the tech side. As a result, on the investment banking side, we are happy that we've been recognized as a very consistent leader investment bank in India over the last 1, 2, 3 years, or 1, 2, 5, 10 years period. You will always find us to be in the top bracket, more often in the number 1 bracket as far as our position in ECM is concerned. Maximum humongous amount of volume of work that we do. And as I said, on the non-ECM part of it, which is the advisory piece, we every year end up doing about 10 odd transactions on a regular basis. Again, gets less noticed, but it's a very strong practice. And we've been suitably rewarded in terms of all our rewards from IFR Asia, and people talked about that in the earlier period. Yeah. What have we done on the other part of the business? So the investment banking I covered. The equities business was a serious rebuild that we did over the last 2 years, 2.5 years time. We've invested in people. We've got talent from outside, from a lot of people, both in the domestic and foreign brokerages, to strengthen our sales, trading, and research setup. All gaps on research and all are filled up. We've invested a lot on the product. We've kind of changed our research product, tried to revamp it. We added a new business, which is the derivatives business, which was very small in our scheme of things earlier on. And we've invested in processes to ensure that technology is to the fore, risk management is to the fore, and so on. So it's resulted in a better quality business and stronger and greater increase, both in terms of volumes, both in cash and F&O. Reflected in financials, we have had a good track record, and we, of course, alongside the growth in markets, we've had a very consistent numbers till FY22. FY22 was, of course, the outstanding year for capital markets ever in the country, and we benefited out of that. FY23 is a tougher year. The first half especially was a tough in terms of deal activity as well as volumes. But I think even then our profitability continues to be pretty decent. We did about 65 crores of profit in the first half. And finally, what are we set to achieve and what are we set to build out? I think the intent for us is to really build out the best investment bank and the best institutional equities house in the country. And that's a clear endeavor and a clear goal that we have. What are the key initiatives which will get us there? And I've enumerated a few of them out here. Number one, when we approach business on the investment banking side, I think we've tried to build sector championships. We do think that sector championships gives us a cutting edge. We've done that successfully, building out our presence in specialty chemicals, realty, REITs, InvITs, auto. You'll find us doing more and more and multiple transactions in a particular sector of choice. And the idea is not to retain it to one sector. We're building this out to multiple sectors now. We set up a new economy group, which is very recent in the last 6 months' time, and we think a lot will happen over here. This was one piece which was missing in our entire strategy of relationships, engaging with clients at an early stage of their business. And this, therefore, also eventually becomes a feeder for us to do late-stage private equity. The other third big initiative that we've started is building out a structured credit AIF. This is a very niche, unique business that we are building out. We're doing something like this already as part of our advisory practice, but we are scaling it up. It leverages our investment banking capabilities as well as the corporate relationships to create another solution offering, to our clients. I talked about strengthening distribution, so that's the other initiative. As I said, REITs, InvITs, structured credit, all of these are new product offerings which are there in the marketplace. We're doing this ourselves as well as along with our Burgundy Private, colleagues within the bank. On the research side, we've done a huge research revamp. We've kind of gotten people externally to build this out, and its research is a lot more now driven by insights and actionable ideas. And finally, you've heard the One Axis theme continuously. We're using it well enough to ensure corporate access of the highest order. The bank has a wealth of relationships which we are tapping into, and we will keep tapping into. And we are also, building, one piece of business which has not been as strong, which is the growth private equity part, by tapping into a lot of Axis Bank relationships. Some of these initiatives, we are quite confident will help us get moving in the direction of really emerging as the best investment bank and the best equities house in the country. More importantly, a very consistent house across investment banking and the equity business. So thank you very much, Ikra. I'll call on Chandresh now for the next one.
Good evening, everyone. Chandresh Nigam here talking about Axis AMC, next 5-7 minutes. This is a slide just at a glance, all the some of the relevant data, what we have done in the last 12 and a half years of our existence. Mutamoti around 2.5 lakh crores of AUM, 1.3 crores customer accounts. Basically, what we have achieved is that out of every 4 investors who've invested ever in the mutual fund industry, we have one of them. So 1 out of 4 investors is an Axis MF investor. Market shares have doubled over the last 4 years. We have equity market share of 10%, which is much higher than our overall AUM. Financial numbers are fairly robust. Last year, we added 3.4 million customers, and that's about 13% kind of market share on an incremental basis in the industry. And in terms of performance, which is the bedrock of the business, while we are known for our differentiated strategy and performance on the equity side, we've got very strong performance on the fixed income side as well. Last thing on this slide I want to highlight is on the SIP counts. We've got nearly 50 lakh SIPs running, makes us the number 2 player in the industry, about 1,500 crores of flows coming through every month. So what has helped us to get here, and some of the things which we need to do further to maintain the kind of growth and the business metrics which we have delivered in the past. One, and which comes up very, very right up front there, is significant uniqueness in our investment strategy and process. I'm sure many of you are interacting with the teams on certainly the equity side, the analysts and the fund managers. Our focus right from day one when we started off business 2009-10 was that we will do more sustainable stuff, invest in more sustainable businesses, high qualities, and it's really benefited from that over the last 12, 13 years. Helped us build a very strong long-term performance track record. So that's something which has helped us in the past, coupled with the fact that we were able to take the story out, take the performance story out, the strategy out, and then multiply it by taking it to a large number of distribution partners, intermediary partners. By the way, that journey is not yet over. I mean, it still continues. At the same time, when we look at the future now, we have to be ready for other products. So we've well established our equity practice, we've very well established our fixed income practice, and now it's to look at some of the other asset classes which investors, maybe a small subset of investors may look at, but certainly will look at. So whether it is real estate, unlisted equity, and there are a number of other things which we are doing on the alternates platform, which I'm going to talk about. Product innovation, certainly on the global side, we are one of the first guys to take people abroad with the aim of diversifying portfolios globally. One area of work which remains to be done for us, where we are a laggard, is passives. I think we have been a late starter there, but significant effort going in there. And lastly, it's on the digital side. I think the key success metric for us in future is going to be how close or what is the quality of engagement we are going to have with our customers. You've heard about it the whole day, something which the AMC as well aspires to really have great customer experience and, more importantly, help investors provide solutions so that we can position the brand much closer to the customer. Some numbers here, despite the volatility in the first half, we've grown very strongly, above 30% growth in AUM last 3 years, 6 years. Equity AUMs have grown 45% again 3 years and 6 years. Unlike the industry where average AUM from equities is about 50%, we are about 65% in equity. So that's the really strong performance, both in fund performance as well as AUM growth we've registered on the equity side, something which we aspire to do on the fixed income side as well. Very retail base, as I said, 1 in 4 customers in the industry is an Axis MF customer. Folio count has grown by 50% last 3 years, compounded. SIP has again been a very strong story, again 50% plus growth rates over the last 3 years and 6 years. Now, what is it that we are going to do in future? This was largely about the past. I think there are 4 key elements which we have to respond to what we're seeing in the industry. Margin pressures are certainly there in traditional channels. Digital and fintech have become much larger. They now contribute to nearly 30% of our floors already, and I think it's rising. Customers are getting used to self-service on the service platforms, WhatsApp, etc., are now taking up 60-70% of the queries. And there is a very large flow of business and preference which is happening from the HNI perspective on alternates, and that's one of the big areas which we are looking at. So 3 initiatives, I'll quickly run through them. One is innovation on the product side, whether it's on mutual funds and passives. But what we're really most excited about is alternatives. I think we've already, in the last 4 years, we have been a late starter, but in the last 4-5 years, we've built one of the broadest alternatives platform in the industry. I don't think any other local asset management company has the kind of breadth in terms of number of products. We've done structured credit, we've done late stage private equity, early stage real estate, both residential, commercial, quant equity. We are now getting into buyout funds. So, and all these businesses obviously need significant investment in teams and quality investors, which all those teams have already been seeded, and we look forward to a slow but a very strong growth in each of these lines of business. Digital, no point in repeating that, but that's been one of the cornerstones of our success on our direct digital business, as well as feeding into our relationship with the fintechs. I think our learnings on the digital side, as we engage with customers, we've put to good use in terms of engaging with fintech clients, and we are probably the largest partner for most of the fintechs or the leading fintechs in the country. And lastly, on distribution. So while initially, maybe 7-8 years back, Axis was one of our largest distributors, still is a very important distributor. We do lots of things together, especially with Burgundy Private. But then there is an opportunity for us to expand distribution, one on the direct side, where we can go and stand in front of customers as well using technology, which was again not possible maybe 4 or 5 years ago. And also still there is more work to be done with intermediary partners, whether it is banks, public sector banks where we don't have much of a presence, more granular, small ticket coming from smaller distributors, which is where the margins are. We're adding to our branch strength. We were 60 branches, we are already 90, we'll probably end up the year more than 100 branches. So all these 3 areas, alternates, digital as well as distribution, help us to maintain the kind of growth rates which we've seen in the past. Financial performance has been strong, grown profits, doubled, tripled profits over the last 2 years. Base effects will kick in, so growth will get muted, but we continue to have very, very strong numbers. In the first half, I think we're seeing the numbers for some of the peers who've put the numbers out, who are listed players. I think we've got better revenue growth as also profit growth. Mandatory slide on disclosures. And the last one was on One Axis. Apart from the many other linkages which we have in terms of accessing common customers, providing solutions to people on the institutional side, we also are working very closely on the digital side. I think the number of partnerships where we have gone into partnerships with fintechs, etc. earlier, and many of them are being leveraged to have more meaningful partnership with the Axis Bank group as a whole. the digital team of the bank working with some of these partners. That's all I have. Thank you. Hand it over to Gop.
Looks like I'm a tail ender. You are there? Okay. Let me quickly take through the quick glance of Axis Securities. We have 4.5 million customers. I will not go through the full presentation. I just pick up a couple of ones which is quite relevant to talk about. Our market share in cash market online is around 3%. Our cash market combined market share is around 2.17. Our profitability metrics, which is on return on equity, is at 26%. First half, our profitability was 99.5 crores, and we have a CAGR of 39% in terms of PAT. In terms of the critical metric, which is revenue per client, we are averaging around 5,760 for the first half. I think that's one of the best benchmarks in the industry. We have an active client of 2.65. In terms of our third-party product, we have a mutual fund AUM on equity side around 2,800 crores. We have active SIP of 1,21,000, and our managed account business, which is our proprietary PMS and Cat 3 products, we have more than 1,000 crores. We are pure retail broking play. We don't have prop, and the institutional broking is with Axis Capital, because most of the brokerage house has these three elements. So we are pure retail brokerage play, and I want to look at from that perspective. In terms of our key differentiator, we are very clear that we are a full service retail brokerage firm, and the quality of acquisition and profitability is our key differentiator. We have built last 3 years robust technology infrastructure and digital capabilities. We have clear holistic approach in terms of giving solutions from retail customers to HNI customers based on the way we work very closely with the bank, and a couple of products I will speak about in later stages. We have extensive distribution channel, which is very omni-channel platforms what we have built. We continue to build product and services on innovation side to improve our customer experience. Sorry, I didn't move it. Okay. In terms of client base, we are the third largest in terms of bank brokerages, in terms of our client base. We've taken a call 3 years back that we'll be a completely full service brokerage house, so that we focus on cash market. And the cash market is the only one segment in the retail brokerage makes considerable profitability for the brokerage firms. If you look at our average daily volumes, in terms of delivery volumes, we are at 52% compared to the exchange of 40%. That's economics what we have to follow. If you are above the exchange volumes, you generally make substantial revenue, and ARPU will change. So you would have looked at our customer base moving up. We are at 19% YoY growth. We saw the dip in first half in terms of the volumes because 17% YoY drop, but if you look at exchange volumes, the drop was around 26%. And we continue to focus on cash delivery. And if you look at our first half, we have acquired 3.78 lakh customers. And if you look at 39% customers come from tier 1 and tier 2 cities. So if you look at exchange data, we are comparable in terms of top 20 cities, which contributes almost 70% of the market volumes. So what do we do for our medium-term objectives, which we want to drive profitability? We said we will do 3 things. We said we have a focused business model with improving quality of acquisitions, because substantial portion of the acquisition in the brokerage firm becomes inactive. So our focus is to acquire quality customers, strengthen our product suite by building our own product through our managed accounts platform. And we also are now building our digital capabilities and very strong digital offerings which we have built, and I have a separate slide on that and the last. When I spoke about focused business model for improving client acquisition, is that we measure our penetration in Burgundy and Burgundy private customers. So we do provide a couple of products, and we acquire. Today we have almost 26% penetration in all the Burgundy customer base. That's a penetration what we built, and we do believe there is a huge headroom in terms of building the relationship with these customers. We also build exclusive products to private banking customers, especially on the equities, by running a model portfolios and also building debt market products for this set of customers. So if you look at our unique client base, first half we are at 2.65, and our ARPU at first half is 5,760 rupees. If you look at our cash market, that's a focus area for us. We have seen the continuous improvement in our cash market. We now stand at 2.36. Our journey started at 1.65%. And with the 52% delivery, that's how our numbers are looking much better, because we focus purely on yield of a customer. Sorry. So when we spoke about investment products, we said that we have now products across all the segments, from the retail to our private banking clients. So this is what we have built across for the last 3 years. I want to pick up one or two products, and explain that what is that we are trying to offer. We are the first in the industry to develop a AI ML based product, which is worked on managed accounts, which is you find this product in a PMS platform, which is about 50 lakhs, but we have retailized at 2 lakhs. Interestingly, if you look at our performance, it has done much better than a human fund managers. It has beaten the top 3 funds now. And we have started gaining traction on this product, and we think that this is a way forward in the industry, that we do believe that AI ML will work. There is a lot of traction with the customers to buy this type of products. Interestingly, we built our margin trading funding book, which was a focus area for the last 3 years. Today we stand at 1,700 crores. We have 2x cover for this. We run with almost 9% NIM on this book. And we continue to believe that this is one area that will improve our profitability. And our sense is that we have acquired market share from a competitor on this space on margin trading funding book. We spoke about having leverage on strong in terms of digital offerings. Now we are building our own cloud native apps, which is completely in-house. We are leveraging on One Axis. When I said One Axis is very unique, where we bought a team from Freecharge, digital team, and our team put together. We now have one team of 50 developers with DevOps, with the designers. Now they're focusing on building native apps, and as well as building on a cloud migration. This is the first kind, because we want to leverage the experience of Axis Bank, because it's the same set of customers. And with the Axis Bank Mobile with the 4.8 rating, I think we want to replicate the experience what we have, so that we are building on this. So we have own source code, and we are moving our all systems to. Yeah, okay. We are moving our systems to a cloud. Another important area what we are working on is that we are building our open APIs. We are already tied up with 2 fintechs. We believe that we can power the fintechs with a brokerage product, and the front end can be built by the fintech companies. I think already 2 companies we are working on. We expect by February we'll be going live with these 2 fintech companies, and that's a huge opportunity. We believe that an open APIs can change the dynamics of this brokerage industry. In terms of our delivery, first quarter we had a 9% Y-on-Y. We had our cost income ratio going up by 60%, because we had substantial investment on people. We hired 500 people on sales team, and we invested on technology. Quarter 2 numbers itself, we have seen that our cost income ratios came below 56%. We do believe that next 2 quarters, this cost income ratio could come down substantially. Our profit after tax is down by 15% Y-on-Y. Our return on equity is at 26%. We do believe the next 2 quarters, when we get our cost income ratio right, I think operating leverage will start kicking in. I think we'll have back to our 43% ROE in terms of our business. So this is all from my side. Thank you very much.